So you've been moving from broker to broker and you need to be able to work out your lot size. You wondered why, when you took a trade with one broker, it worked out at 10 Rand a point. And when you took a trade with another broker, it worked out at 1,000 Rand a point. Or dollars or whatever it might be, and you're thinking, what on earth happened? How come the lot sizes have got different values in the first place? And how do I calculate my lot size when taking a trade, whether it be in Forex or indexes or commodities for that matter? We all know that shares are easy because you can calculate the price of a share. You can work out how much a share is going to cost you. But a Forex lot or a index contract, you really don't know. You're not quite sure what you're paying for each contract. And I'm going to show you how to work that out in this video. First, I'm going to take you to the charts and I'm going to show you our system, how we trade with no indicators, how we trade price action, and a system that'll make you into a profitable trader. And then after I've showed you that, then I'm going to take you and I'm going to show you how you can work out what lot size you need to trade with and how you can work out what size your trade should be. How big should I make my trade? In the 30 years that I've been trading, these things have changed a lot. The way that the markets are put together, the way that things come out, but not that much. Everything remains basically the same. Effectively, all you've got to do is understand which broker you're with. Don't change your broker every 5 minutes and get to know what your lot sizes are. But how you calculate the size of your trade and how you calculate a lot size is something we're going to get to after we've had a look at our charts and after we've gone through the system. Those of you who know me, I'm Rob, I'm from Logical Trading, and I'm here to turn you into a profitable trader. I'm here to show you the psychology of trading. And the trading is not about squiggly lines only. It's also about how you approach your business and the business plan that you use to make yourself actually profitable. For those of you that know me do know that I call trading a 50-50 game. And the reason I do that is because there are buyers and there are sellers in the market. We all know that the market comprises of loads of buyers, loads of sellers in the market, and everybody wants to win. I don't know anybody who gets into the stock market and says, well, my system doesn't have an edge, maybe yours does and you'll be better than me. No, nobody does that. Nobody gets into the markets to lose. Nobody trades Forex because they want to lose. Everybody has an edge. Everybody wants to win. Now, you may think that you've got the best system on earth because you went and bought a course and you went and paid $1 million for it. In fact, I don't know what you would have paid for it, but you may have paid for a really expensive course, and now you believe you've got the winning mentality, you've got the winning system. But I'm going to disappoint you here and tell you that all the systems that are available in the markets, they all work, or they all can work. They've all got the capability of making you a profit. They've all got the capability of giving you a win rate, because everybody thinks that a win rate is important. And once again, for those of you that know me, you'll know that I pay nothing into a win rate. For me, a win rate is completely meaningless. It means nothing. All it means is that you have a system that can make you 10 wins in a row for $10 and make you one trade lose $1,000, and that puts you about $900 in a loss. The win rate is completely meaningless, because those of you that know my strategy, those of you that know my system, will understand that my system is basic principles of how you manage your risk, keeping your risk the same, and going through your trades in such a way that you make more on your wins, lose less on your losses. If you've watched my previous videos, you'll understand clearly why I say that, and you'll understand how to do it as well. So I'm not going to go into detail in that in this video, because you're here to find out how to trade a lot size, how to work out a lot size, and how big to make your trades. Like I said before that, I'm just going to show you the trading system so that you understand that a little bit, and then we can get to the lot size calculations. But before we go, guys, just remember, trading is risky. 80% of traders do lose money. And if you don't like losing money and you don't like risk, you probably should not be trading. It's probably a bad idea at the end of the day. But while you're here, drop down to the description. Get your funded trader account. Go and get your free Forex book. There's a free Forex book in the description as well. Just click on the link, go there, go and download it. It's a PDF, totally free. Go and enjoy it. Funded accounts, however, are not free. Those you have to go and sort out with them. That's their thing. But for those of you that don't have money, I have opened a funded trader account. I opened it a little while ago, and I'm trading it on the live shows, and we're having a bit of fun together to see if we can get a funded trader account to become profitable, and if we can get it to actually make money. But I see these guys now actually offering these accounts without even a challenge anymore. You can actually just buy a live account now. There's a few more restrictions on it, but yeah, that's available as well. It's actually quite insane. There has been a lot of controversy over funded accounts. I do have a video on that in the series, but like I say, I don't play too much into that. In the 30 years that I've been trading, I've always kind of traded with cash. So this is something completely new to me, and it's a little bit of a challenge. But let's go to the charts, guys. Let's go and have a look at the system, and then we can come back and talk about what lot sizes you should trade with. Calculating your lot size has also got a lot to do with how you take your trades, what system you're using to take your trades. Now, we use price action to take our trades. So you've got to manage your risk. You've got to work out your risk. So say, for example, this US 500 here. Let's remove the drawings. So now you've got a US 500 chart staring you in the face on the 4-hour chart. Now it's going up and it's bullish, and it's going up in structure. It's going up, going down, going up, going down, going up, going down, so on, so on. Now, if you take this to the line chart, you could draw a trend running straight through here. That would be a trend support. But what we normally do is we first take it to the day chart and see what we've got on the day chart, because the day chart gives you the most reliable levels. Now, on the day chart, what I will normally do is put in my support level. Now, on a trade like this, I'm not going to put in a resistance level because the S&P, the US 500, is hitting its all-time highs. So what kind of resistance level could you possibly put in? The only kind of resistance level that you can possibly put in on the US 500 is a trend resistance level, which comes out around the 6,000 level. But I'm not even going to bother putting a resistance level into the S&P 500 because I'm not expecting it to go short anytime soon. But what I am expecting is for this, which is a resistance level, to play out. So a resistance level in this sense of the word, look, it comes all the way back to there, and now it's a support level. It broke through resistance, and this has become support. So now you have a daily support level on the US 500. Now you could draw your trend lines through here. You could draw your trend lines through here and have the railway of this bullish run going to the top. But the first thing that you've identified on the US 500 as we look at it, as we stand here, is that it's bullish. So we know that it's a bullish product. Take it back to the candles. Why do I use the red and green candles? And why do I even use the candles if I'm drawing on the line chart? I draw on the line chart because I'm getting closing prices. But I use the candles to trade so that I can see where the tails are, where the buyers and sellers are getting in and out. I can see where the green candles are and the red candles are at a glance. So I know when it's going short and I know when it's going long out of a support or resistance area. It's quite important to be able to see that at a glance. I see a lot of guys changing the color of their candles to psychologically make themselves feel better. And that works if you're trading on 5-minute charts or if you're trading on 1-minute charts. But when you're trading on slightly higher time frames like day or 4-hour, then you only need to see the direction of the market. The direction of the market here is clearly bullish. And you must understand that these squiggly lines are not what makes the market. What makes the market are the buyers and sellers behind these lines. What this is all money that's being spent and sold and bought behind the scenes. These are where the orders are lying in this area, most likely, because it is now support. Now what you do is you take it back to the 4-hour that you want to trade on, because that gives you a much cleaner picture of what you're looking at. Now you want to see, where am I? What have I got? Where are we going? Now you can clearly see that this traded around in this area for a long time. And your best scenario here is this was a flag pattern. This is another flag pattern developing. It's clearly developing. So instead of it coming all the way back down to the support level and going up, the likelihood is that it will continue on to the upside. So you would want to take a long trade from around this area somewhere down here, the bottom of the flag, and you would wonder now, okay, so what am I going to do about my stop loss? And the easiest way to do it, guys, is to simply say, well, I want my stop loss to be around about 57.70, let's say, or I want it to be 56.50. It doesn't matter. The big thing is to work out what your stop loss will be. Then to work out what size trade you're going to take. Can you work out the trade size from this particular scenario. Can I create a new order or not? Anyway, so you want to create an order based on this particular trade. So how would you go about creating that order? Very easy. And I'm going to do this on a demo so that we don't go crazy. Let's say you want to do a buy order. You put your stop loss in here and you say, I want to lose $879. There it is. Maybe I want to lose $1,000. Okay, so there it is. It's 31 units, 32 units. No, it's probably 35. Ooh, no, it's 34. There. $1,000. That's your loss. That's your stop loss. Now you know you can take 34 units on this product. Then you go to take profit and you say, okay, I want to take my profit at say 59.30. That's a good place. And then my risk to reward is 2,716 to 996 loss. So I'm looking at a profit on this. That's my take profit. That's my stop loss. Now, I didn't work out beforehand that this is going to be 34 units of S&P. I don't even know what the broker is. So there you go. 34 units. That's it. The price has decided it for you because you wanted to put your stop loss at, say, 58.21, okay, which is not a good idea. That's actually a ridiculously bad idea. Why would anyone do that? Okay, so you want your stop loss to be, let's say you want it at, let's put it below everything. Let's put it at 56.40. Now we've got a completely different scenario. Because now we can maybe take 5 contracts to make up $1,000, right? Now you can only take 5 contracts. And also your take profit, your risk to reward is absolutely awful. So there's no risk to reward on that trade. So you would not take that trade. But you might take a trade if you've got a stop loss at say 57.60, you might take a trade there because then you can take 10 contracts. You see how I'm playing with the contracts? And then you've got a $900 loss. And over here, you've got a $1,500 profit. So that's how you would take your trades. And that's as complicated as it gets. So just playing around there just to show you how you can work out if you can take a trade at all, or if you even should take a trade or not on an account like that, if it's going to work out for you. So that's a start. I'm going to show you after we've left the charts how you can work out how to, there's the little product, how much the lots are worth, how much the contracts are worth, and where to find out what the contracts are worth. But that's just a little demonstration of how you can take a contractual trade, how you can work out your trade size when you're actually taking a trade on the charts. This looks like it might be developing a little head and shoulders here. That would be interesting. But guys, let's go and talk about how you can work out your lot sizes. Now you've seen the charts. Now you know how to trade. Now you know how to, well, let's say maybe you don't know how to trade yet, but you do know how trading works. You do know how the system works, and you do know how you can manage your risk a bit. But how do you choose a lot size? How do you work out how big your trade should be? So the number one thing you have to understand when you get into getting a broker, getting your trade sorted out, and getting into trading is at the end of the day, each and every broker makes a market and they put it together. And there is such a thing as mini contracts and there's such a thing as normal major contracts. And what actually happens to some traders is you get a broker and they're basically offering you the S&P 500, for example, in many contracts, or the US dollar, Euro US dollar in many contracts. But you don't know this. So you've been trading for a long time at $10 a point and you've actually been quite happy with that. And you've got it all calculated in your head. I can take so many contracts and that's $50 a point and I know where I am, or a contract or a pip or whatever you want to call it. Now the lot size is in your head, it's calculated, you know exactly what size you're going to use, so you're happy with that. And then what happens is you change broker, or you add another broker, or you get another broker in your system because you've got too much money at one broker. So you decide you want to open an account with another broker for whatever reason. And you take your first trade and within seconds you're thousands of dollars down and you're wondering what the hell happened. And it's because the contract size is completely different. It's a completely different size contract because they're selling you major contracts. They're selling you the bulk, the big ones. So you need to find that out from your broker before you take the trades. What size are my contracts? What kind of contracts am I trading with? What size am I trading with? And then you kind of understand better from your own broker where you stand and what you've got. But if you want to calculate general lot sizes and what the normal lot sizes are for a Forex trade, then you can go here to this MyFX. It's free. It's totally free. I'm not promoting them. I've got no affiliation with them. I've got nothing to do with these guys. I'm just showing you this because it exists. And it's really easy because all you got to do is basically go into it and work out what size trade you need to take. Lot size, whether it be in rands, dollars, whether it be in lot sizes, whatever the case. And it's totally free. I'm going to show you how you can calculate your lot size. And you can see this is completely free. You just go into this myfxbook.com. You can find it on Google. I don't know if I'm even going to put a link down there. Then choose your currency pair, whatever that might be, euro, US dollar, your account currency, which is US dollars. What's your account size? So let's say you've got a $100,000 account. Oh, not a million, $100,000 account. And your risk ratio is 1%. And you know, how far away is your stop loss? So let's say it's 10 pips away. Trade size lots, calculate. So it says $1,000. That's your 1%. That says your sizing is 10 loss. So you can take 10 lot trade. And that's as easy as it gets, guys. I mean, it basically tells you what sort of size you can take. If your stop loss is 15 pips calculated, it says you can take 6.67 lots. You know, so then just take 7 or 6. You know, it doesn't have to be exactly $1,000. Let's say your stop loss is 25 pips away, which is quite far. Calculate again, 4 lots. That's how much you can take, 4 lots. And it works it out for you. There's lots of these available on the internet, and it's totally free. So simply use that to get your lot sizes sorted out. To go and use that, I'll leave a link for it, and it's MyFX. I mean, just go and look for them. There's more than that. There's a few more online. If you just Google it, free lot size calculators, and there's plenty out there that you can go and grab. Now, once you've figured out what kind of lot sizes you need to trade with, then you have to figure out, what size do I need to make my trade? How big should my trade be? And that's a bit that really confuses people, because what a lot of traders do is they tend to, and I've noticed it in the questions as well, in the comments and what have you, is they tend to like just trade 1 contract or 2 contracts or 3 contracts on every trade. And that's kind of a mishmash, because each product that you're trading has a different price value on it, and it has a different value running up and down. So, you know, if you want to trade a certain amount per point, then work on that factor, but make sure that you understand each and every trade. What I will normally do is something completely different. Rather than saying, I'm just going to trade $200 a point on every trade or $10 a point on every trade, because they move at different rates. You know, you might be paying point or a contract on say, the Japanese yen at a completely different rate to the US dollar or to euro or something to that effect, because they might be moving at a different speed, at a different rate, or the contracts might be calculated on a different decimal point. So what you need to do, and you can do it with indexes, you can do it with commodities, and you can do it with Forex as well, is instead of working on point value, work on just the points, but also just work on, I'm going to take a trade, and I look at the trade and I say, this is how much I want to risk on the trade. I'm going to risk $1,000 on this trade. So go to the trade and then say, I want to put my stop loss at this level. How many contracts will it take for me to have $1,000 loss on that level? Because I need the stop loss to be at this level. Not too close, it's not too far, it's just at the right spot. This way, you've chosen the exact correct spot for your stop loss. The value of your money, or the value of your contracts, or the value of your account does not dictate where your stop loss needs to be. You dictate where your stop loss needs to be. Now you work out your stop loss. That's where I want my stop. Now how many contracts can I take that'll make that $1,000 up? Then you work that back and you say, okay, that's $1,000. That's how many contracts I can take. My risk to reward should be around 2 to 1, maybe more. And then you take your trade based on, let's say it's 8 contracts. So with $1,000 loss, you can make a $2,000 profit. So then you've got to make sure that you're going to make that profit, that risk to reward exists. If it doesn't, then you have to understand that you're taking a 1-to-1 trade or a 1.5-to-1 trade. And as long as you understand that before you take the trade, you know where you stand and you know exactly how you stand. Don't let the market or your account or the amount of money that you've got dictate where your stop loss needs to be. The first thing you do before you take take the trade is decide where the invalidation area is. My trade will be invalid if it reaches that area. That's where I'm going to put the stop out. Now I need to work out how much $1,000 will get me, and that's how many contracts it'll get me to cost, right? Then if I take those contracts, will I be able to make enough reward if I take this trade? Will there be enough space to the top side to make me maybe 2 to 1, at least 1.5 to 1 on any given trade? And there, you've worked out your trade. It's as easy as that. Most platforms, I know these trading view platforms, and I know the funded trader account uses trading view as well, uses a few others. They also calculate your trade for you. I know that MT5 does not work it out for you. I use MT5 most of the time for my main account, and I understand that it's not one of those platforms that works out your trade for you, because with these other platforms, you can actually go in and you can actually work out how many your stop loss and your contracts on the actual order. And if you're taking quick orders, the best thing to do is to actually, what I used to do with MT5, because it didn't work it out for me, is I would work everything out beforehand. I'd work out what every trade is worth, and then I'd have a little list of effectively how many contracts I can take on any given trade, how much it'll cost me per point. Then I know how much my stop loss will work out to be on any given trade, and I can effectively not even go into the orders. I can just click a buy and sell button at the top left-hand corner, bottom left, wherever you've got it. So if you've worked it all out beforehand and you know exactly how much each trade is going to cost, you can work out your stop losses and that sort of thing quite quickly in your head, because most of it is rounded off in the metric system. Most of it is rounded off to 0.1, 0.11, that sort of thing, and how much it is per point. And then you can just work out, I'm taking a 15 pointer here, it's going to cost me $150 or whatever the case. And you know exactly if I trade one contract or whatever. And that's the best way to work it out. That's the easiest way to work it out. So I hope that helps you guys. I hope it points you in the right direction. Watch the other videos so that you can understand how you can work out your actual trading method to make you profitable, how you can get around the psychology of trading, the business plan that we put together to make you a profitable trader, and how we make ourselves break even or profitable, at least in the markets. Thanks for watching, guys. Don't forget, on the weekend, we will have the rundown of the markets for last week and what we expect to happen next week. And obviously, we'll come back for the live show next week as well on Tuesdays and Thursdays. Tuesdays, Euro session. Thursdays, USA session. Monday, we've also got a fantastic video for you guys, which will explain more things that will be of interest to you in the markets. Guys, thank you for watching. Hope you come back soon. Cheers, ciao, and bye.